To Nasdaq Trade Talks, I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Scott Zajac. He's the president of REX Shares. We're going to take a look at the Dorsey Wright MLP index difference. It's great to have you with us, Scott. Thanks so much for joining us. And let's talk about the Dorsey Wright method, because this is what makes the difference.
Absolutely. So great to be here. So the Dorsey Wright MLP index, what really makes the difference is the strategy behind the selection of MLPs. So it looks at the MLP universe, the entire universe. It's not limiting itself to just midstream or just upstream or just downstream. It's looking at the entire MLP universe. From there, it applies some market cap and liquidity screenings to make sure that the end MLPs are very investable for a product like ours, BMLP. And then it applies the Dorsey Wright relative strength methodology to those remaining names. And what that really does is judge each one of those remaining MLPs against each other. It's a relative strength methodology. And then it takes the top 15 performing MLPs and applies that equal weighting, and that is your index for that month. So it does this on a frequent monthly basis, which is the end recipe for this product.
All right, now what about the index versus performance?
Sure. So this is actually a great slide here. So this is going to break down the Dorsey Wright MLP index versus the Alerian index. So the Alerian index is really known as like the benchmark MLP index. But what this slide really illustrates is how limited it really is in terms of the revenue stream. So this is very much, it doesn't say it in its name, but it's very much a midstream product, as you can see by the large orange coloring here. And what the Dorsey Wright index does, again, like I said, it looks at the entire universe. So that's downstream, upstream, and midstream. So just quickly, on the downstream side, so that's going to be like your end refining and marketing, the people who are like putting the pumps into your car, right? Midstream is also known as like the toll collectors. So think about that as like pipelines and transportation. And then upstream is like your exploration and production. So those are typically your most volatile ones because they're closest to the wellhead and most sensitive to oil prices. So what we're seeing here is that, each month we're looking at the entire MLP universe. And for this last month, you can see we had a decent allocation to downstream MLPs. And then there's a little additional information over there on the side that kind of just breaks down the differences, which I'll also get to on the other slide and go back to your question on performance as well.
All right, well, let's take a look at that. The index performance.
So the index performance is pretty interesting. So the green line there is the Dorsey Wright MLP Select Total Return Index, and the blue one there is the Alerian MLP Index, and then I also put in there the Bloomberg WTI Crude Subindex, so you can really see what's going on in the marketplace. So the index goes back as far as spring of 2015, and that's really important because from the spring of 2015 to the beginning of 2016, that's when oil prices really tumbled. That's when they went from 60 to somehow hit like in the 20s, and during that time, it didn't matter if you were in midstream, which sometimes people would think are like the safer ones because it's the toll keepers, but even like the midstream, as you'll see, the Alerian index, it sold off significantly during that time. And actually the Dorsey Wright index was able to outperform because it had some more downstream holdings. Again, like if you think about like when oil prices sell off, there's not necessarily a sale at the gas station, right? So you don't necessarily see that right away. So downstream guys tend to benefit when prices sell off. So you could see how we kind of outperformed just a pure midstream. And then from that point, from that bottom, that oil bottom till today, the Dorsey Wright index is up about 100%, whereas the Alerian index is up about 60%, which is great, but it still has yet to earn back what it lost during that crunch from that time period. So this kind of shows you a couple things. One, the Dorsey Wright index is using its diversification, I think, in a good way. Like when I invest in stocks, I don't want all large cap, I don't want all mid cap, I do want some diversification. So I want the same thing when I'm looking at my MLPs. So I don't want to be prohibited from having downstream or upstream. So you're seeing how the Dorsey Wright index kind of benefits from that, but also from the frequency of the reconstitution on a monthly basis. So every month it's really picking the winners based on their proprietary relative strength screening and dumping some of the losers there, and you can see how it benefits from that.
All right, great stuff, Scott.
Great.
Thanks so much for joining us at the market site. And thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.